Good morning, good evening, good afternoon. Welcome to the last episode of Trading Blueprint. What's going on, guys? For those who are live, give me a Y if you can hear me, see me, and all that good stuff. And then we're going to get started. It's going to be a big event today. Big event. Lots of questions. I got a couple quick mini lessons as well that I want to chat about right at the start that I think is going to add an extra customization to your trading plan, which could be very helpful for some may choose not to implement it, but I want to talk about it and spend the first 10-20 minutes talking about two topics, and then we're going to dive into the Q&A because I already have a bunch of questions from you guys, so we might be here for quite some time. But for those who are alive, how's Blueprint treating you guys so far? Give me a couple words to see how you guys are doing, see how you're enjoying it. Mark, amazing, love it. Benes, love it. Jose, blow mind. Maxim, amazing stuff, awesome content, great, love it. It's what I needed. New level of trading after Blueprint, awesome. Out of this world, so much clarity. Nice, nice, nice. I thought that that's what's gonna happen. Yeah, for sure. You know, I've been going through the same process as you guys have been going through with Trading Blueprint. It's just I've been going through it before you guys and for quite a few years. But the last, as I've been kind of recording the Blueprint content, I've been obviously kind of doing the same kind of practices, the same things for myself, and really customizing my own trading plan just to make sure that that is the content, that the content within Blueprint is presented in a proper fashion. You know, so I've been going through the same process as you guys have been, you know, really refining, and pretty good stuff. I agree with everybody here. It's definitely a lot of clarity, you know. But last question for those who are alive, what kind of traders are you guys? So for those who already went through the Blueprint and, you know, decided on like a personality, what kind of personality? Day trader, hybrid day trader, swing trader, hybrid swing trader, advanced. Let's see what we got. So we got advanced day trader, advanced hybrid swing trader, hybrid day trader, advanced hybrid swing trader, advanced swing hybrid, hybrid day, advanced swing trader, advanced hybrid swing, swing advanced hybrid. A few different variations in the formatting of advanced swing hybrid personality. Advanced hybrid day, advanced hybrid swing, micro, love it. Advanced swing trader, advanced swing trader, and transition into hybrid when consistent. Cool. I don't see a lot of many short-term, like traditional day traders out there, or regular swing traders. Something to talk about because I think everybody wants the hybrid personality because it's the most advanced from a day trading point of view, and it's the most advanced from a swing trading point of view. And there's a common belief that there's more profit to be made with a hybrid personality. And it's true to an extent, but there's so many benefits that an actual short-term day trader also has, and that can make a tremendous amount of profit. A hybrid personality just adds a little bit on top of it. But in my opinion, the short-term day trader is That's kind of where I would really classify myself as. If I was a day trader, it would be more on the hybrid side of a day trading hybrid, but it would be more focused on short-term execution. And that's what I prefer. That is my personality. And what I mean by that is that I would be much more quicker with taking my profit, right? As a hybrid day trader, because I prefer more of the day trading approach, the quick, the approach where you take profit quickly, right? And then you move on with your day. There's a few benefits to that. There's a few negatives to that as well. And pretty much I covered that in Blueprint, but if any questions come up, obviously let me know in the chat. And and then there's also the benefit of a traditional swing approach for those who specifically, are not going to be on the charts all the time and prefer to have like a more of a passive swing approach to trading. What's going on, my man? There's Petrie yelling. But have more of a passive approach to trading than the traditional swing approach, in my opinion, is really, really, really beneficial. And again, the reason why I find people and traders don't really vibe with that is because of the myth, or I wouldn't even say it's a myth, but there's a tendency to believe that that's normal swing approach generates less profit than the other approaches. And that's true. But now when you risk 2%, or now when you risk 3% per trade, there's a way to manage that risk. And this is the lesson that I'm going to be going into right now, which we're pretty much in it right now. And it's about tolerating risk. First of all, right, let's talk about tolerating risk. Because one thing, let me actually write this stuff down for myself. I have ideas going in my mind and I don't want to forget. Tolerating risk, and also initial management concept. Well, I'm just taking notes. So tolerating risk. You're going to find that with your case study, right? Now that you finish your case study, you picked your personality: day trader, advanced day trader hybrid, swing hybrid, advanced swing trader. You have your personality and did your case study. You started back testing the previous quarter, the previous year, previous 2 years, and you've started to probably realize that, wow, like with this mechanical approach, you're really able to just pull money out of the market without much thinking behind it anymore, because the main thinking was already done when you put that plan together and the learning process. But once you go through the learning process and you put that plan together, then all of a sudden it's just very kind of mechanical execution, right? Straight to the point. And when you're back testing that mechanical execution, you'll notice that the reward over the long period of time, the profit generated by that personality, doesn't matter if it's day trading hybrid, or the swing approaches, doesn't really matter which approach, which personality you choose. Every single one of them has a really good return because it's the whole package behind it, right? From analysis to execution to management and targets and stop management and all of that. And the one thing that you'll find is that your live results a lot of the times will not meet or that benchmark of that trading plan. Here's why. And what I mean by that, let's say you backtest Q1 and you notice that your trading personality generated 50% or 60%, but you executing your personality during that period of time, you notice that, but me executing, I've only made 20 or 25 or 30. But backtesting my trading plan performance for the last quarter, it actually could have produced 60%. There was 60% worth of opportunities in the market during that period of time, during that Q1. as an example, where you pulled out 20 or 25 or 30 out of that 60 that your trading plan potentially generated, could have generated, right, or produced. The difference is risk tolerance, right? During Q1 of 2020, we've had a lot of big runs in the market from a swing trading and a hybrid personality point of view. There were a lot of big runs, wave ones, wave threes. And here's where that tolerating risk comes in. Because when you're backtesting Q1, all of a sudden you're going to pick up every single big wave 3 run or wave 1 run that presented itself, right? There could have been 5, 6, 7 potentially, but you only executed 2 live, right? Out of 6, out of 7 possibilities, you took 2 that you believed were your favorite, right? Or 3 that you believed were kind of the cleanest setups overall. But in general, there were other setups that were pretty clean as well that also worked out, also had that momentum behind it, but were not executed. Why? Because of risk tolerance, right? So this is where you start to realize that there's my benchmark, my trading plan benchmark for Q1 was 60%, or that was the possibility that that trading plan could have generated 60% maximum, as an example. You pull 20. Reason being is because you took less positions than you would have if you've actually executed everything. You know, every time you had an opportunity that matched your personality, you execute and execute and execute, right? That means you can tolerate a lot of risk. With a lot of risk comes a lot of profit, but also comes the negative side, which is potentially a big wave of losses, you know? So you got to remember that when you're backtesting your personality, you will hit the maximum potential that your trading plan could have generated, right? But from a live trading point of view, chances are you will not hit that maximum threshold, right? Because in order to hit that maximum threshold, you would literally have to execute every single position. And this is where risk comes in, your personal risk tolerance. Some people might only be okay with risking 1% at a time, you know, meaning that they take one trade and they do not take another until risk is removed. Some might have 2, some might have 3 positions at the same time, and they won't execute another until that risk is removed, right? Some might have 4, 5, 6. You know, the higher your risk tolerance, the more potential profit you can generate, but also the bigger of a drawdown period you can achieve. Right? So that's risk tolerance. That's something that you can classify for yourself, right? Is what is my risk tolerance? How much risk am I willing to take on at the same point of time, that same period of time, right? And I just wanted to give you guys that clarity because I noticed there was a few questions that came in that, you know, benchmark is so high, what is justifiable, meaning like what is the percentage that I should be hitting? 50% of my benchmark. So if your benchmark was 60, maybe you should hit 30, you know. What I meant by the benchmark in the previous season was simply those were the opportunities that your trading plan could have captured, right? And then you pull the wisdom, the lessons out of that. If you want to take on more risk, you can take on more risk. There's obviously, you got to understand the negatives to that. If you took on too much risk and you took some extra positions that your trading plan did not maybe match, then obviously that's discretionary trading. That is what you use that benchmark for. It's not necessarily my trading plan was 60%, I should be hitting 60%. Chances of that happening would be not extremely high unless I literally execute every single position like a machine, you know, which can be done, you can do, but you got to be able to tolerate a lot of risk at certain periods, specifically Q1, February, March, Q1, when we had those big wave 3s and equities and Forex. In order for you to achieve maximum return for your trading plan, you would have had to execute multiple positions that were roughly the same, right? That's an important thing to remember. I hope that makes sense. Let me know in the chat real quick. I'm just going to have a quick read to see what you guys are talking about. Yeah, and then Niles also just points out, obviously, there's also factors such as being asleep when the entry presents itself, not being able to execute on the chart because you were driving. There's just those types of factors that you just cannot be on the charts to execute, and you miss a position. As an example, over the last few weeks, I wanted to take a trade, and had it planned out. I had my alerts placed. I had my position sizing figured out. And I was ready to execute, and the volume just continued to go and go and go and go. And it was minutes. And within minutes, my entry value was not there anymore, and I did not take that trade, because it just continued to go and go and go and go. And that was a trade that worked out. It would have been profitable, but I did not execute because of how fast it moved. I was just not quick enough to execute. It was literally minutes, So that's just an example of that as well. So always remember that at the back of your mind. When you backtest your trading plan, that is the possibilities, the opportunities that plan could have captured. And it's up to you how many of those opportunities you actually capture, right? Based on your risk tolerance a lot of times and whether you're available on the charts or not. Cool. Jose, can we backtest and take that risk tolerance in our case study to have accurate information? It's hard to do. Because when you're backtesting, you could after the fact, Once you do your whole backtesting, then you look at the data and you'll be like, okay, well, here was an SBO daily wave 3 run, right? I took Aussie yen on January 21st. I took Swiss yen on January 22nd as an SBO for a daily wave 3 run. I took CAD yen on January 21 as well for the same daily wave 3 run, right? Same with an SBO. So you can see in your data that all of a sudden there were 3 positions that were roughly very similar around that same period of time. Now your trading plan only says you execute 1. So all of a sudden you can cross the other ones out and to make your data more accurate, right? So you can to do it within your trading plan. Is just when you're backtesting live, it is going to be hard for you to be like, okay, well, I'm not going to be taking that position because there was 3 others. But you don't know if there were 3 others because you're backtesting Aussie dollar right now. You're not going to get into euro dollar till 3 days after, So you got to remember that you're not backtesting Aussie dollar for January 21, euro dollar for January 21, CAD yen for January 21, all at the same time. Typically, you're backtesting one currency for 1 year, another currency for another year, another currency for another year, right? Over a period of time. So you'll gather all the data, which is good. It's good to have all the data, and then you filter farther. So risk tolerance, you can filter later. After you generate that data, you can be like, okay, based on my risk tolerance, I will only execute 3 positions at the same time, or 2 or 1. And then you can go back to your journal and your data and actually figure it out. What would be justifiable? What would be accurate? Cool. Perfect. Next thing, right, that goes with risk tolerance is the initial management process. Okay, so this is lesson 2, mini lesson number 2. And let me get a good word for this. Managing risk, right? So yeah, literally managing your risk. The initial stages of managing risk. Because after that, it goes into managing the position, okay? But in the initial stages, risk is your 1% or your 2% or your 3%, depending on how much you risk per trade. That is your risk. So this is what I'm referring to. Managing risk, meaning the capital that you put down, $10,000 or 1% or whatever it is. How do you manage that initially? How do you remove that risk before you go into actual position management, trailing the 1 hour 50, trailing the 4 hour 50, using short-term aggressive, but that is when the position is already running well in profit. That is managing profit, managing the position, while it's in profit. But how do you manage that initial part of risk, that 1% or that 2% or 3%? Let's just say 1%, how do you manage that initial chunk? And it's very similar to how you've probably seen me manage SBOs. I'm going to jump on the charts. I'm going to show you an example of this. And I think it's going to be very, very beneficial. All right, so here we go. I have a position that closed today. It was this ASEAN short that I executed to an SBO and a CBO day trade scale and on top of it. Okay, so managing risk. The initial stages of managing risk is extremely, extremely important, right? The trade was taken right on the breakout. The initial SBO was taken right on the breakout of the pattern as we're developing a weekly high test reversal, bouncing off of previous support and resistance and 0.618 Fibonacci on a weekly chart. So we started to break out, and that's when I executed the initial SBO as seen here on my charts. Okay, let me make this smaller or larger. So I have this trend line drawn in from the lows. I do my trend lines from the wicks now, executing SBO. So I have 1, 2, 3, roughly 4 and 5 hits. And then I ended up executing it on the breakdown here as the 1 hour chart broke down. And when I executed, obviously my stop was at the highs. Okay, so initial risk management here. As position drops, right? So as we enter that SBO and position goes into the wave 1 run here, right? We start moving and it goes into a wave 1 run. Sometimes we enter and it could consolidate, and it could consolidate before it actually falls. But once you're sure that it's moving, it's running, right? What you can start doing is you can start removing your risk, right? So I'm going to take my stop loss here. And let me just duplicate it. There we go. So I'll take my SBO stop loss. And let me make this a little bit thicker just in case you cannot see. There you go, this big thick line. Okay, so my SBO stop loss. As price is dropping, right, all of a sudden I can start removing half of the risk, right? As price goes down, now I'm like, okay, it's confirmed, it's breaking down. I can start to remove my risk, right? As the wave 2 pullback happens, then all of a sudden you can be like, okay, now this run has finished and we're in a pullback. So you're not going to be really trailing your stop loss as it's pulling back because you're mainly trailing your stop loss as price has fallen. So when it's pulling back, at that point you can be like, okay, it's pulling back for an IBO or it's pulling back for a CBO. Where's the safe stop placement? 0.75 fib? Cool, so you put it there, right? And now you've just removed 2/3 of risk on this position, meaning that if it continues to go farther, you still have protection of 0.32, 0.5, 0.618. It could still bounce off of 0.618 and continue farther down. So you're still protected, but you're not fully 1% at risk. You're only risking 0.25% or whatever it would be, right? You can also remove full risk if you want at times, right? When that wave 2 pullback happens, there are times where you can remove full risk. Totally acceptable as well. And then you would lock it in, right? Then once price starts moving again, right, going into, it's continuing the trend. Now the trend is confirmed. Well, at that point, you can do what I did here. And all of a sudden, I put my stop loss above the wave too high and then let it ride. Let it do its thing and switch over to short-term management, trailing the 1 hour 50, or long-term management, trailing the 4 hour 50 MA, right? This is where what I just did there with the SBO, I've removed the initial risk on the position as the position was developing, right? Because there are times where literally it goes in your favor and then it breaks, it goes into consolidation, hits you out for minus 1%, and maybe it goes again, maybe it doesn't, right? So we're removing the maximum loss. Instead of always having minus 1% for your loss, this case, you'll hit minus 1% sometimes literally when you enter the position and you're wrong and price goes fully against you. There's going to be maybe 10%, 20% of the time where you enter the trade, 20% of the losses, they will just go immediately against you. It was just a false breakout. You entered and price just went in the opposite direction to stop you out almost immediately, right? Other times, their chances are that you're able to remove some risk so that your losses are not always 1%. There could be 0.5, 0.25, or break even, right? And there's a benefit to that. There's also a negative. Let me also show you from a day trading point of view, right? But what I meant by that is this is the initial risk removal, right? Once you remove that risk, once you're able to bulletproof the position and potentially lock in some profit, then after that, you can literally go into your normal 4 hour management or 1 hour management based on the 50 EMA, right? So this is the initial risk management, right? The initial removal of risk, or what did I call them all? Got to create a good name for this.
Managing your risk initial stages.
Yeah, managing your risk initial stages. Day trades, right? Or scale in positions. Now, you can do the same thing with a day trade, like as an example, my scaling here, okay? So my scaling, I exited, so my SBO gets stopped out for 0.55%. Pretty good. I was obviously running at like 2-3%, got stopped out for 0.55. Oh, it's no big deal. My CBO, I took 0.4 profit on my CBO, okay? A little bit more of an aggressive management, but the initial stages of removing risk are the same, right? As you enter the position, this SBO, right, or that CBO right here, this was a CBO entry. So as I enter that CBO entry on a break and read, so the 4 hour 50, a 1 hour 50.32 fib, we got a 4 hour high test, we had a 1 hour bearish engulfing, okay? As I enter that CBO, at this point, price consolidated and then started to fall. And eventually, as it started to fall, my direction was confirmed, okay? So at this point, I started to remove my risk. I cut down risk and then fully removed my risk as price was breaking down here. As price was pretty much at the double bottom levels. At this point, I'm like, okay, fully remove my risk. Let's see what happens. Price continued to go farther, and this is where I blocked in profit, right? As we broke down and continued to go past the previous wave one low. At this point, I locked in profit, and now I switched to my management of the position, right? Short-term management, short-term aggressive management, long-term management, whichever management you're applying, right? And the benefit of that is both from swing trading and day trading, there is the same benefit. And there's a question here by Shanda that is the negative side of this. Shanda says, is removing risk this early on swing trades sometimes not allowing the trade to fully play out if it doesn't drop aggressively right away? Right? So I'm not removing risk until it drops, right? So if I enter the position and it moves slightly and then it goes to consolidate on the 4 hour 50 EMA, as an example, if I enter the trade and they kind of consolidated on the 4 hour 50, I maybe would just remove a little bit of risk, potentially not, Once it really starts moving, that's when I'm removing my risk immediately. But you can remove risk at any time. It's again your risk tolerance, right? So you can build it within your trading plan to figure out when you like to remove your risk, those initial stages. How do you want to do it? How do you want to remove risk? Right? There's a negative that you'll remove your risk on your CBO, on your day trade or your swing trade, and then price stops you out for break even or a slight profit, and then it falls for your 2% or 3% or 4% or 6% position, but you were not in it because you get stopped out for no risk, for zero or a little bit of profit, right? Like in this case, I made just under 1% on this position. It could fall in my direction and continue going and going and going. But when I look at the charts at this point, well, the 1 hour 50 EMA was fully broken, right? So the reason why I entered that CBO is not valid anymore, right? So I entered that CBO because it was rejecting the 1 hour 50. It was rejecting the 4 hour 50 EMA. That's the reason why I entered that position. I entered it to catch this run. Now this run continued, and then it did not. It reversed, right? And it continued to go up. Well, at this point, this CBO entry is not valid anymore. Well, it's valid, right? It's valid, but your bias should start to be changing, because the reason why you entered that position is because it was rejecting the 1 hour 50 and the 4 hour 50, and you were looking to catch that run. Well, that run happened and then turned around and was short-lived, and it started to break back above. So at this point, you can stay in the position, right? Because it might just be false, it might consolidate, and the longer bias, the higher time frame bias might still play out, right? And it happens where position, you enter a CBO, it drops, then it goes back, consolidates around your entry price, and then finally drops 2 days later because of the higher time frame bias, right? So if you prefer that, then you simply do not manage your position initially until it literally is fully confirmed and it's moving, right? If that's what you prefer, if you would literally, if that happens to you, like right now, I'm out of the position for under 1%. It might fall, I might miss 10% of profit. I don't care. To me, it doesn't matter, because there's more opportunities, many more opportunities to make money, right, in the markets. But if you prefer to, there's half of the population, I would say, would prefer to not do that and accept their 1% risk and let it fully play out, and only start managing based on the 4 hour and the 1 hour, and to skip that initial management process of removing risk. You may choose that because you prefer to capture that 10%. I prefer to lock in profit, right, kind of thing. And that's just my personality. Even when I was a day trader, I utilized short-term aggressive management almost on every single position, because I prefer to lock in profit, right, quickly and move on with my life. That is just what I prefer as a trader. Other people prefer to accept that risk and let that trade play out fully, right? But this is an alternative, right? Removing risk like this is just an alternative to your management, and it's that initial step. The positive is that you don't have any risk on the table pretty quickly. Within a day, within hours, sometimes on your day trade, you can literally remove your risk fully. And on your swing trade, within a day or 2 days, you can again remove your risk fully. That's the positive. The negative is you might be stopped out prematurely because price goes into consolidation or ranging, but the higher time frame bias is still correct. So it goes into a range and then it drops 3 days later after you got stopped out. And some people prefer to capture that big drop, whilst other people prefer to remove risk. I'm the person that prefers to remove risk, and rather than catch that whole drop, as an example, right? And that is how my personal trading plan is built at this point in time. I went through various trading plans. I did everything. I did both sides of this throughout my journey, and personally, I still prefer to remove my risk. So now I'm building my trading plan, the trading plan that I'll be using for the next little bit. And that's how I'm approaching my trading, right? From this point of time. Does that make sense, guys? It's a quick little lesson on the initial risk management, right? The positives and negatives of that. And again, some of you might want to implement it within your trading plan. Others might choose to accept that 1% risk and let the position play out fully, by utilizing long-term management or short-term management instead, right? And skipping that initial management process. And again, there will be times where it's going to be annoying. You get stopped out and price falls. Just know that there will be times like that. And for me, that's totally cool, because that is how I like to trade, Okay. See what you guys are saying, and I'm going to go into my next little lesson. So, quick question by George. So, in the same AJ position, that the same ASEAN I just showed you, similar CBO entry, and he says that I did not feel like I could bulletproof the trade, as this would have not allowed for price to reject the 4-hour 15 MA for the second time. Perfect. So your risk tolerance is different than mine, right? Because to me, is I'm entering that position because it's being rejected right now, right? And if it falls in my favor, that is when I'm removing my risk pretty quickly, right? So if then it goes back to reject that 4-hour 50 one more time, there could be a double bottom, there could be a higher low, that could break out and continue going higher for -1. I rather be stopped out and miss the potential profit. Why? Because as a day trader, as an example, from a day trading point of view, I know that there's shitload of opportunities in the market, right, to actually make profit and make money, right? So I'd rather be out for break even, slight win, slight loss, right, than hope that my position will turn around, right, for the second time. I'm entering because at that point in time, price action is rejecting the 4-hour 50 MA and drops. And because it drops at that point, that's when I'm removing my risk. If, again, it goes there for the second time, then my risk tolerance means that at this point, I have few options. It could reject and fall back down. It could break out, consolidate, maybe fall back down. It could break out and hit me out for -1%. At this point, I do not know what the hell will happen. But I know I'm certain of what's going to happen, well, 90% certain, when I'm entering that position. I'm entering it because of this. When it's rejecting it another time, well, at that point, I'm just hoping that it's not going to stop me out and that's going to go in my favor. And that is, again, it's fine. Just make sure you do the same thing over and over and over again, the same thing, right? I'm just giving you an alternative, an option for managing that initial risk. There's a positive and a negative to every single personality, right? To every single approach. The purpose of Blueprint is to pick something that works for you, that works for your personality. I know that that's what I prefer, right? But I know that I miss out on profit a lot of the times too, because of that. And I'm cool with it because I know I will catch another one, right? Consistency. Pick, choose. These are options. It just shows you how customizable this is, right? And the last little lesson, quick one. This is answering a lot of questions that I've already gotten previously from you guys. Here you go. The next little topic I want to talk about real quick is about entry orders versus live entries. Because I also know that not a lot of people take entry orders and prefer live entries instead. I'm going to do is I'm just going to delete that, clean this up a little bit. Actually, I'll just leave it like that. Yeah, let me delete this. Just going to clean up this chart. There we go. Boom, done. Okay. So let's say you want to take a trade, right? And you measure it out, got a breakdown, you got a pullback, and that's a CBL. This is a CBL, and you're looking to take a short. You have two options. Option number one, you place an entry order somewhere around 0.32. Option number two, you enter a live entry. Okay. Now, for me to explain this, I need to put my targets, which my targets based on my trading plan, I target based on Fibonacci extension. So this to me would be a wave 3 run, right? On the 1 hour chart as a day trader. So I would be targeting roughly 1.618 as the maximum. Okay. So if you're placing entry orders, you can place an entry order of roughly 0.32, stop loss of 0.618, maybe slightly above, right? Target 1.618, right? And that's what you're looking to make, right? That's how you're looking to execute that position. That is 6.5%. Entering at 0.32 with an entry order, having a stop loss at 0.618 or slightly above, and targeting 1.618 gives you a return of 6.5% as a day trade targeting this 1 hour trend, right? The alternative, entering live, right? Entering live, you can enter lower, right? So there could be a time where you're entering the position on a 5-minute breakdown, and that could be right here instead, right? A little bit lower. You want the same stop loss, so slightly above 0.618 or right on 0.618, and the same target at 1.618. Well, there's a difference of 1.5%. All of a sudden, with a live entry, we're getting 5% with the same stop loss and same target, but with an entry order, we're getting 6.5%. It does not mean that an entry order is better because there is a higher reward. Chances are, majority of the time, an entry order, because of the way we do our targets, or at least the way I do my targets, it's always the same, right? If I'm placing entry orders, I know that every single time I'm going to have my entry at 0.382. I'm going to have my stop loss at 0.618 or 0.75, depending on the strategy. And I'm going to have my target at one of these Fibonacci extension levels, depending on the wave that I'm targeting. Wave 3, wave 5, different targets for the waves. But I know that it's always going to be fixed like that. So if I'm always executing entry orders, I can always roughly expect that if I'm catching a full wave 3 as a CBO, right, I should be making about 6.5%, around 6%, 6.33, 6.5 is roughly the average with an entry order, versus a live entry is about 5% average. Okay. The benefit with the entry order is obviously you make a little bit more profit. A lot of times it's an extra 1%. Okay, just like in this case. That's the positive. Another positive of an entry order is that you don't have to be present on the chart, right, to execute the position live, meaning that you are not going to miss the position. The negative of an entry order is that you may not get that rejection and price might continue going up to close you out for a full -1, right? Now, live entry, the positive with a live entry is that you're actually waiting for confirmation and you have that confirmation. So chances for you to be stopped out just by price continuing to go higher is slimmer than with an entry order, right? Because you're waiting for that rejection and you're entering live when the rejection happens. That's the positive, right? The negative is you make a little bit less profit because it's a little bit of a wider position, okay? Pick whichever one you prefer. Do it consistently is my lesson, right? And let me remove screen share. That's the difference between the two entries. There's risks, there's positives to both, right? There's a risk with an entry order with a live entry. Sometimes you enter a live entry, it's a false breakout and continues falling down. It happens once in a while. You guys probably experienced it. But majority of the time, it's a little bit of a safer approach. The entry order compensates that. It's a little bit more aggressive, but it compensates that by having a larger return on average, right? So because it has a larger return on average, often by 1% or more, like in this case, right? That risk that an entry order has, that you might be executed into an entry order and price might continue going higher to stop you off for minus 1%. Well, that's okay in this case, because it might be very slim that happens. It might happen once in a while, but every single time you're making more profit than a live entry. So it compensates. It equals itself out. You see that? So it's all about doing the same thing consistently over and over and over again, right? And that's what I mean. There's benefits and positives to all the approaches, but it's not necessarily one is better than the other. What's most important here is that you customize a trading plan for you using all these options. They're all options. They're all great options. The beauty, the consistency comes when you choose your trading plan and your personality, your risk tolerance, your risk profile, your management, and then do it consistently for a long period of time, right? But I just needed to cover those three things really. Managing the initial risk, right? Entry orders and risk tolerance, right? Very, very important things. Hope that makes sense, guys. Let me have a quick look at the chat and I'm going to bank out a bunch of questions. Does that make sense, guys? The entry orders? Let me know real quick for those who are live. Cool. Awesome. The issue comes in when sometimes you choose to take an entry order and the other times you choose to take a live entry. That's not really consistent, and unless you can make that consistent somehow, right? That's where the issue can come in. Okay, cool. So I have a bunch of questions. I'm going to go through them all right now. Starting question number one with Ryan from a few days ago. And Ryan says, can a hybrid day trader implement SBOs purely for wave 3 and wave 5 runs? So can a hybrid day trader, mainly predominantly a person who's day trading, pullbacks, day trading runs, but also when it's a daily run, they're stretching their target based on the daily wave, right? A hybrid day trader personality. So can a hybrid day trader implement SBOs on top of the day trade, the hybrid day trade, on that daily wave 3 and the daily wave 5, meaning that they're executing a hybrid CBO on a daily wave 3 and an SBO. So first it would be an SBO and then a hybrid CBO with a scaling. Okay, same position, same target. This way, so that Ryan says, this way we can always get into position and still have the benefit of scaling in if a day trade entry presents itself. The potential reward from both a scale and CBO targeting 1.272 as an example, plus an SBO would be huge on the bigger waves. Then I'd also still take all the day trade pullback moves that fit my trading criteria. Is this too much? I mean, it can't be too much. So what this would be is it's literally a day trading hybrid personality. So you're day trading pullbacks, either short term or advanced day trade, right? So you're day trading the pullbacks. And when it's a run, you're taking it as a hybrid day trade, targeting the daily level. But before that, you're executing that SBO, targeting that daily level. So you're scaling in with a CBO. Obviously, you can make that as a plan. You can go as custom as you want, right? This just shows you how many different variations there are. So the answer is, yeah, you can do that. Question is, do you want to do that? Right? I personally don't. I want to take my profit on a day trade. I don't want to stretch my day trade if I'm already running an SBO. There's a benefit to taking profit, right? There's also benefit of holding it, like a hybrid day trader would, right? You make a little bit more profit, potentially. So personally, I don't think one personality makes more profit than the other, to tell you the truth. I think they're all very, very similar. It just depends on you personally. So my answer to that is, yeah, you can take all the day trades that you want as a day trader hybrid, but also take the SBO on wave 3 runs and wave 5 runs, having the same target as the hybrid day trader would, right? Obviously. So it's an advanced or day trading hybrid personality with an SBO execution on wave 3s and wave 5s. Totally acceptable. It's just whether you want to do it or not. Right? I don't do that myself. You definitely can. There's no reason why you can't, right? So that should answer that question. So Ryan says, I suppose my question is there a reason why hybrid day traders don't do this? Because they're day traders, man. Gotta remember, day traders, people want to be day traders. I like to be a day trader, right? I predominantly a day trader. I have a similar approach. It's just I don't stretch my targets on those scalings, right? I'm short-term I'm an advanced day trader with a swing approach. I call myself a SBO advanced swing trader hybrid because I'm predominantly focusing on swing trades, my SBOs. I scale in with a day trade, not a hybrid trade. I scale in with a day trade. The reason being, I like to take profit. Right? That's my personality. That's how I have always been, right? For the years I've been day trading, I like to take profit. That's who I am, right? But I also see the beauty in the big positions, the swing trades. So I execute SBOs with a day trading scaling. That's my personality, right? And I like taking profit. There's a benefit to it. There's also a benefit of letting it play out for more profit. Whatever you do consistently, that's what matters. Both options are totally fine. Do them consistently and you'll start seeing profit. Hope that makes sense. It's just make sure it's not too much for you. That's the only thing. Make sure it's not too much for you and it's actually makes sense for your lifestyle and so on. Sometimes like this type of approach a hybrid day trader with an SBO on top of it, right, can potentially give you a lot of kind of cloudiness, chaos in the mind, potentially, but if it doesn't, if you like it, 100%, this just shows you how customizable this is, right? All right, let me move on to the next one. And guys, for those who are live, if questions come up, keep on posting them live just so I can keep on answering and don't have to come back. Okay, questions by Kendall and Shonda. Question 1, season 4 performance review. What is a realistic margin of error to set as a goal based on the backtesting benchmark? Is it realistic to trade 100% the same in live versus backtesting? So this is what I was talking about earlier, right at the start of the webinar with your risk tolerance, that you'll notice that your backtesting results are not going to be exactly the same as your live trading results, simply because of your risk tolerance. How much risk are you going to take on, right? So the realistic percentage of like a discrepancy between live data and backtested data, it's hard to say, and this is what I meant. The backtesting data just shows you how many opportunities there were based on your trading plan that you could have captured. If you captured 1/4 of it, great, good, you made money. Maybe look into how you can increase your risk or why you missed some of those positions and so on, right? But you're not supposed to catch them all unless you literally have you can tolerate a lot of risk and are there available 24 hours a day to execute your positions, right? That's the only time when you literally will be 100% with your benchmark or close to that 100% if you take everything and are available to take everything. Real life scenarios will probably, there's going to be some room for error there. What's acceptable, it's up to you. You know, it's something that you'll learn after years or few quarters of doing this. You know, you'll start to realize, okay, I catch about 50% of the opportunities on average, or 75% of the opportunities on average. I could catch them all if I choose to take 3 trades on at the same time. You know, you'll get those types of insights based on your performance. Hope that makes sense. Question number 2 by Shonda and Kendall. Do you still consider the weekly 50 EMA for targets on higher time frame IBOs, or do you mainly look at the Fibonacci extension now? I look at both. I still look at both. Weekly 50 EMA is a great target area. Chances are I would place my target on like the weekly 50 EMA is equivalent to the 4-hour 50, right? So let's say it's a daily IBO. Chances are you're going to have a weekly 50 EMA in your way. Just like if it's a lower time from IBO, you'll have the 4-hour 50 in the way. On a pullback, the 4-hour 50 is a good target. What often lines up with that is 0.618 Fibonacci extension. The short term, the actual day trader personality, right? Where from a swing trading point of view, it's the same principles. It might be a daily IBO, but the weekly 50 is in the way, right? So a safe target from a swing trading point of view would be the weekly 50 or 0.618 Fibonacci extension. Maximum target is obviously wave 3 run maximum target, and the optimal is 1.272, or as maximum is 1.618 for a wave 3 run. That means you're trading through the weekly 50. And you can manage risk around that. It's all about risk management. So you can target the maximum and be managing risk as it's approaching that weekly 50 EMA or any of your target levels. You can approach day trading, swing trading this way. This is how an advanced day trader approaches markets as an example, right? An advanced day trader, let me explain it from this point of view. An advanced day trader, doesn't matter whether it's a pullback or a run on a daily chart, they will always target the optimal or the maximum target based on the wave. So if it's a wave 3, optimal target is 1.23. Oh my God, I can't remember the targets now. 1.272 is the optimal target for a wave 3 run. The maximum is 1.618. The safest, 0.618, right? So a normal day trader on a pullback takes the safe target. An advanced day trader takes the maximum or the optimal, whatever they prefer, right? Now there's a management behind that, right? Let's say 1.0 is being rejected instead, or you're targeting 1.618 and 1.272 is being rejected. Chances are you're going to take profit, right? As a day trader, you should be managing it a little bit more aggressively around that point. At least I would, right? If I'm targeting 1.618, but it looks like 1.272 is being rejected, I'm taking profit, right? I don't care about that extra 1%. I'm locking in my 5 or my 4 or my 3. I'm taking profit. That's how I approach it, right? And taking profit can be an actual exit or moving up your stop loss below a different EMA, below a 15-minute EMA as an example, right? From a swing trading point of view, so that's managing that risk, right? So also means that if 0.618 is being rejected, so that advanced day trader, if you're taking that pullback and the 4-hour 50 EMA is being rejected, 0.618 is being rejected, right? Chances are it may not go past that to hit your target. So how do you protect yourself? Initial risk management. You remove your risk, you lock in maybe a little bit profit, you bulletproof, or you lock in a little bit more with short-term aggressive management, right? And you exit the position because the 4-hour 50 EMA is being rejected, right? That's how an advanced day trader approaches it versus a short-term day trader, an actual day trader. I don't know why I call it short-term. And conservative day trader or a beginner day trader or just a day trader just has that target placed at 0.618 4-hour 50 EMA period. There's no management needed there. There's no really necessary management except the initial stages if you want to remove your risk, versus an advanced day trader needs to watch it a little bit more because they're targeting farther. So how are they going to react when this 4-hour 15 EMA is being rejected? That's up to you. You can take profit, you can remove risk and let it ride, or you can take profit and exit through a short-term aggressive management. Same thing with swing trading, right? So if you're trading through the weekly 50 EMA, you can use 1 hour management, short-term management. So if your target is past that weekly 50, past that safe target of 0.618, and you have to trade through the weekly 50. Well, how are you going to react if the weekly 50 EMA is being rejected? Short-term management. Trail the 1 hour 50. Lock in a little bit of profit. That way, if it breaks out above, they'll just continue going. But if it rejects the weekly 50 EMA and starts breaking down, you're out for profit, right? Or you can just place your target and exit, as it's being hit. Two approaches. One's simple with a nice, easy, safe target. Other one's a little bit more advanced and includes more management, more chart time, that type of approach. Hope that makes sense. Cool. Another question, how do you choose the equities to backtest if you use a stock screener and stocks are changing on it all the time? So for those who use a stock screener, you'll notice that the stock screener updates in real time a lot of times, right? Depending on the stock screener that you're using, but the majority of them update in real time. So when you're making your watch list, I personally make my watch list, if it's based on a stock screener, I'm making my watch list at the end of the day, once it's trading day closes. So then I'm looking at the stock screener, see how stocks performed for that day, right? And I make my watch list at that point in time. Nothing's going to change. It's not ain't going to change much, right? The screener is not going to be updating because it's based on the previous day, right? And the day's closed. Another time when you can do that is when the market is opening up. Vancouver opens at 6:30 in the morning, equity stock market. New York stock market opens at 6:30 in the morning here in Vancouver. So if I'm trading based on a stock screener, right, looking for day trading opportunities based on a screener, then I can also make my watch list before the market opens. Sometimes there's some gapping in the market and so on. And typically the futures market opens up a little bit before. So there's pre-market trading that happens or post-market trading that happens. So before market actually opens up, the stock screener, again, will not be changing much until market opens. So you can make your watch list based on the screener at the end of the trading day, post-market, or before the trading day opens, pre-market, right? As the market is live, the screener will be updating in real time. So it's a little bit hard to make your watches that way. Cool. Next questions. Brian, question 1. After backtesting for our benchmark and we have a final results, should we be shooting to be close to that backtesting figure, or since we're getting used to our new plan, stick to 5 to 6% a month for the first 6 months? So see, similar question. As we already covered, it's just a little bit different. So you cannot make your profit estimates based on 1 month. It has to be, or 1 quarter, it has to be a bigger database. Based on a year? Yeah. So if you backtested your trading plan for a year, yeah, you can start, let's say your trading plan performed 100% for that year, or 150 or let's just say 100. Divided by 12, you get roughly 8.3% or something like that per month, roughly 8% per month. And that's what you can approximate. That's what you can make as a goal to hit. But you got to remember that you're going to miss a bunch of positions too, right? And I'm not going to execute all of them based on how we started this webinar. your risk tolerance, or whether you're on the charts or not. So maybe 5% is more achievable. It's great that your trading plan has all those opportunities, right? That's the benefit. See it as opportunities, not necessarily a benchmark to hit. See it as, yeah, during 2019, my trading plan presented all these opportunities. I could have made 200% if I cut them all. But obviously, you're not going to catch them all. So if you make 100, great, 50% of your benchmark, totally cool. You killed it, So I don't think it's necessarily realistic to target your benchmark performance unless you're executing all the positions that present themselves, and have a higher risk tolerance. I have a pretty high risk tolerance. I'm okay of executing quite a few positions because of my management. I remove risk pretty quickly, allows me to have a higher risk tolerance, right? If I was not removing risk quickly, I would have a little bit of a lower risk tolerance, right? I hope that makes sense, Brian. But yeah, you can do it. It's just collect more data, average it out, and just know that those are the opportunities that were presented. Whether you're going to catch them live, it just depends on your risk tolerance, right? So it might still be better to target like 5%. Look to average 5%, or whatever number you want to choose. 30% better below your benchmark, 50% below your benchmark. You can do it that way. Your benchmark can be 100%, and you can choose, well, I want to hit at least 50% of the positions, or I want to take at least 70% of the positions. So my goal should be about 70% of my benchmark divided by 12, right? That type of approach. Awesome, Brian. Second question, should capital injection be part of the trading plan? Capital injection should be part of the trading plan if you're still looking to put capital into your trading account, right? A lot of us, and depending on your trading journey, you're not going to be putting any more capital into your trading account. You're just going to grow it and withdraw from it instead. So some of you guys are going to have a withdrawal plan. I'm going to withdraw every month or whatever, 5K, 10K percentage. Some of you might have a deposit plan. So yeah, 100%. If you're still building your account size, then you can put in within your trading plan that every 3 months that I'm consistent, I make a deposit. So let's say you have $100,000. You're going to start off with 25, consistent for 3 months, put another 25, consistent for another 3 months, put in another 25, consistent for another 3 months, put in another 25, and now you max out at your 100K. You can make a plan like that for yourself as an example, right? So 100%, you should have that in your trading plan. The way I would recommend doing it, the way I have recommended it before to people in my deep dive and so on, private mentoring, it was based on that type of approach. You achieve a certain level of consistency, put in more capital, right? Cool. Okay. Cool. Let's continue. So I have more questions here from a paramedic. I do shift work as a paramedic, so sometimes find it hard to be on the charts. Do you think a mixed swing trader, so higher time from IBOs and CBOs only, as an example, if I am at work, coupled with lower time from SBO scalings, if I can be on the charts, fits in with an advanced swing trader personality? I know it's mixing swing and advanced swing. Okay, so can you mix swing and advanced swing? Yeah, you can. You don't have to, right? It's, again, the way I would approach a swing personality, not an advanced swing personality that executes SBOs. The way I personally, if I was trading based on like the swing personality that I talked about in Blueprint, I would be executing it with live entries, or with entry orders, I mean. Chances are I will be placing an entry order at 0.382 and executing my position that way. Have a nice safe stop, well above that daily 50 EMA at 0.618, right? Giving me a lot of protection. And there's a benefit to that because of the wide stop loss. You can enter at 0.382 and you have that big stop loss. So price can consolidate, and then hopefully fall in your favor. And at that point, you start removing risk, right? Whereas an SBO rejects 0.382, gives you that SBO entry, you have a tighter stop loss. So if it goes into consolidate, you might get stopped out, right? You might get stopped out for break even, while a swing trader, not an advanced swing trader, but a swing trader, because of the higher stop loss, would still be in the position. And it would not take one hit or one trade for break even, another SBO for break even, like I have during this current quarter. I took a few SBOs, a bunch of them closed out for break even because the market was consolidating, right? So April 2020, we've seen a lot of consolidation in the market from a daily point of view, from a swing trading point of view. So if you're executing SBOs, the way I execute SBOs with removing my risk initially pretty quickly, all my positions were pretty much break even or slight wins kind of thing, right? Whereas a swing trader would still be in that initial position, chances are, because of a wide stop loss. And they would be still chilling, still holding into position, just chilling, watching everybody take a bunch of trades. That's the benefit to a swing trading personality, right? So yeah, the question is, when I'm on the charts, when I'm not on the charts, can I execute with a swing trading personality? And when I'm on the charts available, can I execute with SBOs? I mean, in my opinion, you don't have to do that, right? Why? The reason why you want to execute with an SBO, what is the reason? Why do you want to execute with an SBO over a traditional swing? Higher reward? Yeah, okay. But not if you risk 2% on your initial swing trade. Chances are your reward to risk will be roughly the same, right? And again, if you do the initial risk management, you can risk 2%, maybe even 3% if you have a higher risk tolerance, right? On that initial swing position with a nice big stop loss above the daily 50 EMA protected by 0.618 on a daily chart. Let's say it's a daily CBO, right? So it's a CBO on a daily chart. You put your stop loss above the daily 50, weekly 50, 0.618 Fibonacci. It's well protected. You have a good entry at 0.32. Let's say you risk 2%, right? As soon as the lower time frame breaks down, as soon as that rejection, let's say you enter with an entry order, that's how I would execute it personally. Doesn't mean that that's the best way to do it. That's not the only way to do it, right? You can enter your swing trades with a break of the 1 hour 50 EMA, just like you enter your day trades live with a break of a 5-minute 50. You can enter your swing trades with a break of the 1 hour, still have a wide stop loss, right? And then you have the same kind of benefit and the negative with an entry order and a live entry. So you can enter your swing trades with a break of the 1 hour 50 EMA and have a high stop loss, not an SBO, tight stop loss. Risk 2%. As an example, doesn't matter what entry you choose, entry order, live entry, it doesn't really matter. Let's say you risk 2%, and then price starts going down, breaks the 1 hour 50 EMA, starts trending down. As soon as that happens, you remove your risk fully, 100% pretty much. You enter at a good price of 0.32. So as soon as that 0.32 level is rejected, your stop loss is way up here. But as soon as 0.32 is rejected and price starts heading lower and the lower time frame starts trending down, you're removing a risk. Instead, all of a sudden, 2% risk gets chopped on half, 50%. Now you're risking 1%. A few days later, if price continues going farther down, all of a sudden you're no risk. And then you let it play out, right? Based on your management. So that's that initial management approach of removing risk before you move on to position managing profit, right? So I want to separate management here a little bit. Removing risk initially, so managing risk initially versus managing profit based on a 4 hour 50 or 1 hour 50, right? So that's more than you were looking for from that question, right? Obviously, the initial question was, can I execute a swing when I'm not on the charts, and an advanced swing, so an SBO when I'm on the charts? You can do that, sure. It's complicating your trading plan, but it's still pretty simple. So 100% you can do that, right? I wouldn't do it that way. I would keep it more simple and just do the same thing. And instead of risk 2%, remove risk quicker, right? That would be my approach instead, because I know the only reason why you're looking for the SBOs is because it's more profit. Not always, doesn't have to be, right? There's options, many options, guys, and many ways to deal with this. Again, another example of how customizable this is. And there's not just one way to trade it, to trade the way we trade, right? And it's also easy to get confused because of that. A lot of options, right? That's why, again, trading plan, picking one option out of the 2 or 3 or 4 is often better. Another question, as above, due to shifts, I can have 5 days off during, so I work shift work as well. So what he's saying here, sometimes I work 5 days on and I have like 5 days off, right? Or 7 days off. So as an advanced hybrid swing trader, is it feasible to add a rule of only taking lower time frame IBOs and CBOs when I'm on the days off, plus the higher time frame swings and SBOs when I'm on shift? Or is this FOMO of different trading styles? I think it's a little bit of FOMO, but obviously you can build your trading plan however you want it, right? Manage risk however you want it. It's on you guys now, right? You have the option. You can do whatever you want. The more complex it becomes, the more harder it is to execute. Specifically, if you start breaking it down like this 5-day period, I'm going to be only taking swing trades, while the days when I'm on the charts, I'm going to be day trading. Guess what? There's negative to that, because when you're on the charts, day trading available, it might be a shit week. It might be a week of choppy price action and you took hits, while it's the following week where you're actually working, market is moving, it's trending, and now all of a sudden you took hits. Week 1, you lost 3%. Week 2, you were working, well, there were opportunities to make 6 from day trading, but you were not on the charts, so you're still down 3 instead of being up 3. There's a negative to mixing personalities, not executing a personality consistently. There's a benefit to that. You might be in a wrong loop where you're literally out of sync with the market because of your shift schedule. So 100%, you can do it. You could choose to do it. Would I want to do it? No, because of that reason. Pretty good reason, right? In my opinion. So it's a little bit of FOMO, in my opinion. Focus on quitting your job, and at that point you can do whatever the hell you want. So until you quit your job, focus on simplicity, something that you can execute, something that's easy to manage. On your days off, rest, learn, keep on doing the same thing, refine your current approach. And then when you quit your job and you have all the time in the world, switch up your trading plan if you want and become a day trader, add more time to your trading. That's how I would do it. I would always come back to season number 1. Why am I doing this? Know myself, know my lifestyle. What do I want, right? Do I want to kill myself when I'm working as a paramedic shift work, and then when I'm off, I'm day trading, and then it's whole executing 2 plans at the same time pretty much. If you want to do that, great, right? It's going to be a lot of work. You're not going to have much rest. My option is, the way Blueprint was built, is the reason why I started off with section 1, know yourself, is that you know your current condition, you know your current lifestyle, and you can build a plan that matches your current lifestyle, that is built for you to keep on executing that plan, so that eventually you have that lifestyle upgrade, right? And when you have that lifestyle upgrade, you've hit your goal, probably quit your job, switch up your trading plan. And now if you want to be a day trader, be a day trader. You don't have to do it all right now, plus working 9 to 5, right? Unless you want to, but it's going to be a lot of work and you don't have to. That's the thing. You do not have to. So it can be FOMO at the same time. Would you simply just execute the higher time from swing trades with a rejection of 0.32, or do you look for a break of a certain EMA, such as a 1 hour? You can, it's an option, right? Like I said, if I was executing swing trades, I would be placing entry orders or executing somewhere around 0.32. Keep it simple, keep it minimalistic. Otherwise, you can enter with a break of the 1 hour 50 EMA, which would be the equivalent of a lower time from CBO entering live on a break of a 5-minute 50. So you can take a higher time from CBO live with a break of a 1 hour 50. 100%. There's no reason why you can't. We do it all the time through day trading. You can do it also through swing trading, where you can place an entry order, up to you, whatever you prefer. Benefits and negatives to both styles, right? Like we talked about at the beginning. Is there any rule for executing SBOs on the break of the 4 hour 50 EMA if you miss the 1 hour 50 EMA break being out of work? Or is this FOMO? Could you use this as a more higher time from swing trade approach as mentioned above? Entry order saves all your issues, right? The break of the 4 hour 50 EMA, chances are it's going to give you such a wide entry that your risk reward may not even be 3%. The reason why I enter SBOs on a break of the 1 hour 50 EMA is I still get a pretty good reward risk ratio, right? If I'm all of a sudden entering SBOs on a break of the 4 hour 50, my reward risk ratio is chopped on half, sometimes even more than that. So to me, it's straight up no, based on my trading plan. You can choose to take it. Nothing wrong with it, right? There's a negative, there's a positive. The positive is you'll be in a position. The negative is your entry price, your risk reward. You're not going to be able to remove risk as quickly as the person who enters on a 1 hour 50 EMA, right? The person who enters on a 1 hour 50 EMA break would probably be risk-free, at that point in time. So there's a negative to taking that 4 hour 50 EMA break instead of the 1 hour 50 EMA break. So in my trading plan, it's a straight up no. I will simply move on, take the day trade, or look for the next opportunity. So take the CBO instead as a day trade based on my plan, or you can take it as a CBO hybrid, right? But I will not take an SBO on a break of the 4 hour 50. To me, there's too many negatives. Bad reward risk, very wide stop loss, cannot remove my risk quickly enough, that type of stuff. If you miss an SBO position, can you take an IBO or CBO position with the same target as what you had in the SBO? Yeah, you could. I don't, because I prefer short-term day trading, right? I like to take my profit. But yeah, you can definitely take a day trading hybrid. You can build that into your trading plan. So if you miss the SBO entry, you execute the IBO as a day trader hybrid. You can build it. Obviously, the more complex you make it, the more complex your trading plan is, the more complex your execution. And the more complex your execution, the more room for error, the more confusing you can be, right? The more emotional you can get. But if you can lay it out clearly enough for yourself and be mechanical, you can do anything you guys want, and then you back test it and see how it works. Am I right in assuming you don't have to take SBOs off of the Elliott wave theory? You can take off normal major support and resistance levels. Elliott wave theory, guys, is just another confluence factor, something I use primarily for targets, right? As I mentioned from the Elliott wave lesson, it's something that I've learned after I was already successfully trading, after I've created all the strategies, right? That's when I came across the Elliott wave theory. And I'm like, wow, it fits perfectly into the way I trade, right? I don't have to change anything. But the Elliott wave theory fine-tuned my targets. That's about it. It just fine-tuned my targets. It made my targets mechanical at this point in time. You guys know that, right? Going through Blueprint. Using the Elliott wave theory, you can make any target mechanical based on whether it's a wave 1, wave 3, wave 5. But I'm not executing positions just because it's the Elliott wave theory. I'm executing trades because it's a triangle pattern. It has candlestick formation. It has multi-time frame analysis. It has support and resistance levels, horizontals, trend lines, Fibonacci retracement, right? I'm executing trades because of multiple confluence factors, not because there's an Elliott wave present. The Elliott wave is something that I look after, right? I make my analysis. I find the setup that has a lot of confluence factors based on all the technical analysis skills we've learned, price action patterns, head and shoulders, triangles, wedges, right? Candlestick reversals, multi-time frame analysis, horizontal support, 50 EMA, trend line, right? All of those are technical analysis skills. I use every single one of them when I find the setup. It could be a CBO, could be an IBO on a higher time frame, could be a CBO on a higher time frame, could be an ABO on a higher time frame, right? ABO, IBO, CBO already uses multi-time frame analysis, trend changes, deceleration, price action patterns, trend lines, Fibonacci retracement. The strategies already use multiple different things. The LEO wave theory is then put on top of it to figure out the optimal target, right? And ABO is typically a wave 1, and IBO is a wave 3. A CBO can be a wave 3 or a wave 5, depending on how it develops, and ACB is typically a wave 5. Based on that, I know what my safe targets are, what my optimal targets are, what my maximum targets are. And that's what I use the LEO wave theory for, and that's pretty much it. Everything else, the LEO wave theory is already built within. It's built within the strategies. So to answer your question, yeah, I will take a trade if the LEO wave theory is not present, because as long as everything else is, right? Chances are, if I'm taking the trade, I'm still using the LEO wave theory and Fibonacci extension specifically for targets, right? Cool. Guys, you still with me? For those who are alive, been chatting a lot. How's it going? Let me know if you're still alive. Is it good? Does it make sense? Any questions? I'm going to be going through the chat questions in a bit. I'm almost done here. Guys, I've been doing this for so long, I'm just kind of talking based on concepts that are in my head. I can be doing this forever. There's so many insights, and that's the thing. The reason why I have so many insights is because I've done the process of blueprint in a different fashion many times. I've been trading since 2012. The amounts of insights and knowledge and fine-tuning I have done is way more than anybody here, way more than anybody here. And I hope that at some point somebody catches up. But I don't know if anybody will, because I'm committing to trading for another decade at least. And guess what? There's going to be many more insights. It's going to be building on top of what I already know, And throughout the last decade, I was able to figure out all these various trading personalities. I was all of these trading personalities at some point in time, or I literally back tested every single one of these personalities over the decade of me trading, and fine tune every single one of them. But there's much more, there's much more. It's small things like this, the negatives and positives. That's what I do, because you can back test to learn, and then you back test later. It's not to learn anymore. It's not for experience. You back test for insights, for wisdom, for lessons. That's what I back test for now. That's what I've been doing for the last years. I'm back testing to gather more insights, to develop something, to fine tune something. Right. And by doing that, I'm always looking at the positives and the negatives. That's why I can give you positives and negatives for everything. Right. And that's why I'm saying it just doesn't matter. Just pick one out of the 2 or 3 options and do that. Right. It's the more you start mixing, the more discretion you put in. That's all of a sudden when your whole trading plan goes to shit, But there's many options. And that's the beauty with this type of trading. And I just realized that by doing Blueprint. Is by breaking it all down. It's by the last 12 months of recording Masterclass, recording Blueprint, I was forced to kind of break everything down that I did. Literally, like, as one of the lessons within Masterclass, caused chaos in my mind because of so much information. And then I started categorizing it, based on my experience, based on my insights. And here we have it, Blueprint. Let's continue with another question here. So, Billy, I'm a hybrid advanced swing trader. I only execute SBOs and CBOs. So here's my question. CBO, I'm more comfortable executing my CBOs with a 1-hour phase line break or a trend line break instead of a 5-minute 50 EMA break. Any advice? Totally cool. Draw your 1-hour trend line on a 5-minute chart. And take the trend line break on a 5-minute time frame instead. So often you guys know that as you have that pullback for the CBO on a 1-hour chart, right? There's a pullback to reject the 4 hour 50, 1 hour 50.32. A lot of times you can draw a trend line or a phase line on a 1 hour chart, which is actually a trend line on a 5-minute chart. So I would say copy that trend line onto the 5-minute time frame, refine it a little bit. I would draw based on the wicks instead on a 5-minute chart. So I would refine it to the wicks, to the highs and the lows based on the wicks, and then execute the trade on the break of the 5-minute trend line. Just like I execute an SBO on a break of a trend line as well. You can do that 100%. It's just what I would not do. I would not wait for the 1 hour to close. Chances are you'll miss a shitload of trades by doing that, right? Because the 1 hour can be like a massive candle and all of a sudden there's no trade and it would have worked out for 2.5%, but you missed it, you know? So the 5-minute 50 EMA break, the 50 EMA break, it's a nice early entry. Sometimes you'll notice the 50 EMA on a 5-minute chart is not really being respected. It's consolidating, it's choppy, but there's a trend line that's very clear, very decisive. Price is bouncing off of that trend line whenever it hits it. So you can choose to enter based on a 5-minute break off the trend line instead. Totally cool. I mean, that's something that you can already be doing right now as an additional layer for your 5-minute 50 EMA break. Sometimes the 5-minute 50 EMA is going to be great. Sometimes you're not even going to have a trend line. There's going to be times where phase line looks totally weird. The trend line looks just weird. It doesn't make sense. But a 5-minute 50 EMA makes more sense. I would not eliminate one and replace with another. I would be utilizing both. Sometimes the trend line would be much more accurate. Sometimes a 50 EMA on a 5-minute chart would be more accurate. But I would still use the 5-minute for execution, not the 1 hour. Question 2, SBOs. If 1 hour trend line and 50 EMA break just right above, below the 4 hour 50 EMA, would you execute or wait for a 4 hour 50 EMA break? So if an SBO entry happens just before the 4 hour 50 EMA, would you take it or wait for the 4 hour 50 EMA break? Very slim chance of that happening unless you're waiting for the 1 hour 50 EMA, 1 hour candle to close. That's the thing, you know, with entering SBOs on a trend line. So I enter SBOs on a 15-minute chart, not a 5-minute chart, a 15-minute chart. That's how I enter my SBOs, based on the trend line break on a 15-minute chart. Okay. Sometimes there's a 1 hour 50 EMA that's more valid than a trend line. Well, that I would execute on a break at the close of the 1 hour candle. Sometimes I'm just confident before the 1 hour candle closes, I'm executing the trade on a break of the 50 EMA. So I see the momentum, I see it fall, and chances are the 1 hour candle is going to break that 50 EMA. It's already breaking it. So I might just take that live entry before waiting for that candle to close. Positive and negative to that. I see both sides. But the only time I really see SBO being close to the 4 hour 50 is when that 1 hour candle just closes well below the 1 hour 50 EMA, right? I would still take the trade. I don't care about the 4 hour 50 EMA. If I'm executing SBOs, I'm executing based on what's happening on the daily chart. That's why I'm executing SBOs. For me, SBOs and the lessons, I don't even include a 4 hour chart. There's a reason, right? Because an SBO is a swing position. When you're a swing trader, you don't even look at the lower time frames. That's what I mean. You can just place an entry order at 0.32 as a swing trader, right? So as an advanced swing trader, I'm just using the 1 hour chart to execute my SBO. I already find my higher time from bias. I find my higher time from setup. I make sure it has retraced properly and it's rejecting the levels that I wanted to reject. And then as the 1 hour chart has a trend change, I need the 1 hour chart to form a trend change to give me that breakdown, right? That's when I execute, right? I don't need to look at the 4 hour chart. I don't look at the 4 hour chart when I'm executing SBOs. I have it on my charts, but I don't really pay attention to it. I will still take the 1 hour break, right? Instead. I will not take the 4 hour 50 EMA break instead for the reasons I mentioned previously. Very wide position. It will cut into my reward risk ratio. I'm not going to be able to remove risk as soon as I would like to, right? So for me, it's a straight up no. But there's no reason why you cannot implement it and play with it and backtest it, right? But I don't. I wouldn't do that. I would simply mark that as a missed trade. And if there's a CBO present, I'll execute as a day trade. Some of you might execute as a day trade hybrid, right? The CBO instead. So like I said, I will not take the 4 hour 15-minute break. I would instead look for a CBO. But that's personally, right? You can do both. Manual close, SBOs and CBOs. Would you manually close a pair if price goes again? If price goes against your setup and breaks back above the 1 hour and 4 hour 15-minute to avoid a full loss. So if you take an SBO and a CBO, would you manually shut it down if price breaks above the reasons why you entered? So if price breaks above or below the reasons why you entered the position in the first place, should you shut it down manually? And the answer is yes and no, right? Some people will choose, we already talked about this before, it's about the initial risk management, right? That was the first lesson. The second lesson that I talked about at the start of this event. So some people might choose yes, and they will shut it down, or they will already have their stops moved. Like personally, I would already have my stops moved, because when that 1 hour, that 4 hour 15-minute breaks back above where I wanted to, back above the reason why I entered the position in the first place, right? Like I went short because those levels were rejected. So when the 1 hour 15-minute and the 4 hour 50 get broken back up to the upside, my stop will already be tight. You know, chances are I'll be out of the position soon. But you can also manually close if you want. There's a positive and a negative to that. The negative is you might close it and price might fall to hit your 10% target. The positive is you close it and price might continue to and would have hit your stop from -1, right? The positives and negatives, pick whichever one you prefer. I prefer the removing my risk initially. Moving down my stop loss, removing my risk, that's what I prefer. The negative is I might miss some beautiful trades from a higher time frame point of view that just continue falling. And I'm okay with that because I know there's other opportunities. Some people might not be okay with that. And I would say half the population would not be okay with that. I would even say more from my experience of working with a bunch of traders, I found that actually more traders were not okay with that. I think it was mainly FOMO because they were not okay with missing the 10%. That was the reason. They were not okay with missing that 10% move, whereas I'm okay, right? Because I don't focus on the 10%. Like I have a bunch of positions running, right? And I know what the total is. I can make about 55%. If they all play out, if all the daily charts play out and so on, I could have made about 55%. I don't care. I focused on, I make what I have locked in, period. That's what I focus on. I focus on the money that I have locked in. And that's what I know. You know, that's the only thing I can guarantee. I cannot guarantee a 10% win, right? Or 50% for if all my trades play out. I cannot guarantee that. But what I can guarantee is management, right? So I only look at the profit that is already managed, risk-free, locked in. And that's what I focus on instead. So that is why I also remove risk quicker, right? Because that's what matters to me. To others, you might prefer the 10%. And you might kind of feel weird if you executed early and then worked out for 10%. If that's you and you would kind of get emotional if that happens, chances are you may not want to close down your trade manually or even manage risk the way I do, right? Quickly. You might want to let it play out. Keep your 1% risk, accept the 1% risk and let it play out. It's all knowing yourself, knowing who you are. How are you going to react if this situation happens, right? And making a plan that is based for you, because both options are totally cool, right? And I know, again, there's traders, more traders will not, I would say, majority of you guys will probably not be okay with missing 10%, knowing that you would have made 10% if you did not shut down this position. I don't care about that. I'm happy about the 0.5 or the 1% that I didn't make, as an example, right? Because that's what I can guarantee. So just a little bit of a different approach, right? Different risk tolerance. Psychology, currently having a huge loss in April, minus 8%, heavy mental stress right now. My mind keeps yelling to me to reduce my capital to half until my trading plan is working. Very struggle and afraid to execute any setup at the moment. Any advice? Well, to you, I would recommend potentially considering removing your risk, backtesting that. Backtest your April, your Q1 with the type of approach I explained initially, the initial risk removal before you go into your position management, right? Remove risk quickly and see how your results would have changed. And then would you maybe you would prefer the way I approach the charts at this point in time, right? That's how I approached the charts back in the day when I was fully day trading. That's how I'm doing it now with my current trading plan. Yeah, that's the only thing. And another beauty is you're sitting at -8. How did you do in February? How'd you do in January? How'd you do in March, right? Again, the beauty of the other side is that January, February, March, like again, there's some of these personalities. A day trader can be pretty consistent. The beauty with day trading is that you're just looking for quick daily moves, man. You want the daily chart to just go in your favor for 1 day, 2 days, maybe 3 days, right? But not weeks. So a day trader just looks for that quick opportunity. You can make money in any market, right? If you're very selective. You can also take on a lot of risk if you're not selective, but you can make money in any market. Swing traders, hybrid traders thrive when the market is trending aggressively, right? On the higher time frames, when there's a lot of momentum from a higher time frame point of view, like we have witnessed Q1 of 2020. That's when swing traders and hybrid traders really thrived Q1 of 2020. Day traders did their own thing and did it extremely well because they probably got the same positions and potentially more trades because they also took pullbacks and so on. You can average 5 to 10% a month day trading, right? You can also average that by being a hybrid and even a swing trader, right? With different approaches. And Billy, to answer your question, the -8, how do you deal with it? Well, if you were executing your trading plan in January, February, March, how would you have done? Would you be up? Would you be up 30%? Would you be up 20%? Would you be up 40%? If you were, what's an 8% pullback? Nothing, right? Not much. So just understand that different personalities thrive in different environments. And you got to understand that by doing your trading plan consistently, I mean, you're going to be catching opportunities. You're going to be having nice account runs. But as you have an account run, your profit, your account balance goes into a run. I mean, there's going to be a time where you're going to take a loss, another loss, and another loss, and maybe a few losses. But there's just going to be a higher high and a higher low in your account curve. And then you'll continue with another wave because the market is trending again. So look at to deal with that, Billy, the -8%, 2 ways. Look at it from a long-term point of view. Don't focus on monthly returns. If you're a hybrid trader, if you're a swing trader, you should be focusing on quarterly returns, not necessarily monthly returns. You should be focusing quarterly, yearly returns. You should not be looking at, I want to average this every single month. No, you should have a goal. I want to hit this quarter. You got to understand, as a swing trader, as a hybrid trader, focusing on mainly those daily runs, right? Those daily runs happen a couple times a month, right? At the beginning of the month, you might have a run, and then it's going to pull back. That might last a month. The entire month of April was a pullback and consolidation. That's all it was, right? April 2020 was a pullback with sideways consolidation, whereas January, February, March were runs, right? So if you were trading January, February, March, you would be banking profit. And then April was that pullback, and then consolidation. During that consolidation, you took some hits. But that should only be a slight pullback in your account balance over the long term. Because the following month, chances are we're going to start trending again. And as long as you keep on executing your plan, your account curve is going to continue going up. And this was just a little glitch where the market was consolidating. View it as long term, specifically if you're a swing trader or a hybrid. Don't necessarily focus on monthly returns, focus on quarterly, annual returns. Look at the longer picture, not the short-term picture. A day trader doesn't really matter, all right? And the other option is obviously you can remove risk like I was talking about, right? So you should still look at it from a long-term point of view. And if you want to implement the initial risk removal like I do, you can do that too. You know, again, benefits and positives, we've already broken those down. David, hey, could you clarify the difference between a conservative and an aggressive risk profile? I'm having difficulties understanding the difference between the two risk profiles. Since I don't put too much emphasis on horizontal lines on the lower time frames, however, I don't trade against strong lower time frame trend lines. Which risk profile is this? Well, I would say you're neutral. You're avoiding some risks and you're taking other risks. You're not aggressive, you're not conservative, right? A horizontal line that has over 3 rejections is as good as a trend line that has 3 rejections. Is as strong as a 50 EMA that has 3 rejections, right? It doesn't matter. So if you're avoiding one risk but taking the other risk, you're neutral, right? A conservative trader would be avoiding the horizontal line and the trend line, right? And taking the CBO instead, right? The break and retest of those levels. They'll be looking for another opportunity or a totally different opportunity. That's a conservative trader. Aggressive trader, doesn't matter. IBO is present. I don't care if I have this horizontal level. I don't care if I have this trend line. An aggressive trader takes every single opportunity. As long as you have a good daily rejection, a good daily setup, a clean breakout on a lower time from a clean pullback, right? An aggressive trader takes that opportunity because they have multiple confluence factors and maybe just that one negative trend line. And to them, that might be okay, right? I have a daily trend line, daily 50 EMA, daily 0.32, daily trend, daily deceleration with a double doji and a high test, 1 hour trend change with a breakout and a higher high, 1 hour pullback, deceleration on the 1 hour 50 EMA, 5-minute break. Those are all positive confluence factors. Add MACD divergence on top of that. That's all positive confluence factors. But hey, there's a negative trend line. There's a trend line that's been rejected once, twice, 3 times, 4 times on a 1 hour chart. It was rejected just before your entry, potential entry. It's a trend line that caused the pullback, just like an IBOC. Very similar, right? Would you take that position? The conservative trader would say, no, I'll wait for the CBO. The higher time from confluence factors will still be there. The lower time from trend change will still be there. And I will remove that risk by taking the CBO instead. Still have the same confluence factors, even more, because that horizontal level that was holding price on a 1 hour chart, that trend line that was holding price on a 1 hour chart is now broken. And guess what? Now they're positive confluence factors. A conservative trader looks at the market that way, right? An aggressive trader has all the same confluence factors, but sees that trend line as a negative, identifies it as a negative, sees that horizontal level, identifies it as a negative confluence factor, and chooses to trade through it for the reason being is that it's a CBO, with a shitload of other confluence factors. And because of that, they take that trade. And as long as you do it consistently, sometimes you might have a loss, other times you're going to have a win. Whereas a conservative trader is not going to have a loss and is not going to have a win, but will have a potentially higher strike rate because they'll wait for more confirmation. But they'll have less opportunities and less risk tolerance, right? The more risk you can tolerate, the potentially the more profit you can make. But that all depends on how good your analysis is, right? It really depends on how good your analysis is. How good are the higher time frames? How many confluence factors do you have? How many negative factors do you have? Make a decision. If you're conservative, you're going to look to how can I eliminate those negative confluence factors? A conservative trader thinks differently, right? They see the negative confluence factors and they're like, how can I eliminate them? If it's an advanced breakout, it's simple. I'll wait for an IBO. If it's an IBO, again, it's simple. I'll wait for a CBO. If the CBO has a negative risk, fuck it, no trade. I'll wait for another opportunity. An aggressive trader takes the ABO, takes the IBO, takes the CBO, doesn't matter. As long as everything else is beautiful, right? That's the difference between aggressive and conservative risk profile. But based on your example, because you avoid trend lines on a 1 hour chart, but don't really look at for horizontal levels, you're neutral. You're taking some risks and avoiding others, right? And keep on doing it, but I wouldn't really classify you as an aggressive or a conservative because of that. Good stuff. Let's continue going. What's your top process? Thoughts about prop firms? Do you think you can trade your own capital, your own account, and your funded account slightly differently? I view it as an evolution to be a funded trader to quit my job. Example, you can't hold positions over the weekends, one of the rules, which sucks for a hybrid day trader. So the only difference is that you close down your positions before the weekend. So if I was trading at a prop firm with a restriction that I cannot hold positions over the weekend, I would not be a swing trader. I would not even be a hybrid trader. I would be an advanced day trader. If I was trading at a prop firm, personally, right? If I had that restriction of I have to take a certain amount of trades a month, I cannot hold trades over the weekend. So what's the point of swing trading? What's the point of hybrid trading? I would just be an advanced day trader, as an example, or a normal day trader when trading the prop account, as an example. That's what they want anyway. Prop firms want day traders, right? That's why they give you those restrictions, right, on your accounts. But the question is, what about my own account? Well, I would simplify the process, man. I would just trade one account. The reason why you want to trade with a prop firm is because you don't have a lot of capital anyway. That's why you're going for a prop firm to get funded, to get your account funded. So why trade two totally different styles on a funded account and an account that has very low capital? Why? Focus your attention on the prop account then. It has more capital, you have more potential to make more profit. So just focus on your day trading personality, right? 100%. That's what I would do, right? And then your personal account, worry about that when the account balance of that is more than the prop firm, right? At that point, you'll probably forget about the prop firm and switch over to your own account, right? And start trading your own capital. That's how I would approach it personally. I would not decide I'm going to take advanced swing trading approach on my own account and I'm going to be day trader on the prop firm account. It's going to fuck your mind so bad. Sorry for swearing, but it could create chaos in your mind because you're always looking for two totally different things, right? And your managing styles are different. And sure, by having this trading plan and having two separate trading plans, you can make it pretty mechanical and you can make it sustainable, right? And doable. But do you want to, is the question. Does it even make sense? Is it worth your time? Or should you just focus on the prop account, which has more capital, right? That's my question to you. That's something to contemplate on. But if anything, I would use my own account. Let's say you have 25K in your own account and $100,000 at a prop firm. Okay, you have some good cash in your own account, right? Invest it, build a portfolio, buy some stocks, start working work on your portfolio management, right? Maybe do something else with that capital, right? Invest in a different fashion, day trade the prop firm. Or you can choose to swing trade your own account and day trade the prop firm, but I would not want to do that personally. If I was beginning stages like that, where I'm growing my account, I would just focus on where do I have the most potential. Focus on that and dedicate all my attention to that. All right, last few questions. I'm going to have a look at the chat. We've been going for 2 hours now. Jose, pending orders. I have a CBO set up. The price pulled back to 0.32 Fibonacci and the 4-hour 50 EMA. We don't have a break of the 5-minute 50 EMA yet, but I need to go to work and I cannot wait for the break of the 5-minute 50. Can I plan an entry below the 5-minute EMA or a phase line to be sure about the position while I'm out of the charts? Yeah, you can, right? So let's say I'm going to toss you on the chart just so I can show you. I think it'll be just easier. So I'm going to show you how that would be executed with an SBO on ASEAN. How's the webinar so far for those who are guys? For those who are live, let me know. How's it going? I asked that a little bit earlier, but let me know. So SBO on here can be taken on live, right? Live as it's breaking down on a 1-hour chart or as this trend line is being broken down on like a 15-minute chart or whatever, right? So live entry can be taken like that on the live breakdown. If you're waiting for price to break down, but this is happening and you got to go to work, you got to step off the charts, you got to go for dinner, whatever. If it's dinner, I would say stay home. If you got to go to work, then maybe place an order. But then you can decide, okay, so I'm going to place an order, a sell order somewhere like that, So if price eventually breaks down, I'll be triggered. So I wouldn't make it tight. I would put it like nicely below, kind of have idea. And then, you can be triggered in. So you can do that from a day trading point of view as well, right? Put it up. Let's say you're going long as a CBO and you're typically executing CBOs live, right? So you're executing CBOs live on a break of the 5-minute 50 EMA or a trend line on a 5-minute chart or a phase line on a 1 hour is a trend line on a 5-minute, right? So let's say you're typically executing live on a break of the trend line or break of the 5-minute 50, but you got to go to work. You got to step off the charts. So you can place an entry order, a buy order above that trend line or that 5-minute 50 EMA. Just make sure it's nicely above so you don't get entered just simply based on a high test kind of thing. So 100%, I would, you could do that. I've done that before for that same reasons. Got to go to work, got to step out, traveling, there's reasons where that could come in useful and you can definitely do that. It's pretty much similar to a live entry. It's the same thing. It's just you're now live on the charts. Negative with that is you might have to adjust it a few times. Price action develops really quickly over hours. So you still might want to check your charts every few hours and adjust your order, right? Because price might continue going down, and then you can move your order a little bit lower, get a better reward risk ratio kind of thing. And same thing for SBOs. Mark, do you have a mechanical way to switch from a long-term management to short-term management for your SBO plan? Maybe even if it's just a running percentage. Sure. As an example is long-term management would be 4 hour 50, short-term management would be 1 hour 50. Let's say the 1 hour chart goes into wave 5. Switch to short-term management. That can be one rule, right? Let's say, as an example, that's an example. A 1 hour chart goes into wave 5 now, or for 4 hour chart goes into wave 5, maybe an ACB developed, after an ACB, you switch to short-term management. Those types of rules, right? Or a 1 hour chart goes into a parabolic run, just starts exploding to the upside, and let's say the distance between the 1 hour 50 and the 4 hour 50 is 2%. So you can have a rule like that based on percentage. If the distance between the 1 hour 50 and the 4 hour 50 is over 2%, meaning that if I wait for a 4 hour 50 break, I will make 2% less than if I wait for the 1 hour 50 EMA break, right? If I shut down my position on a 1 hour 50 EMA break, I will make 2% more than if I wait for the 4 hour 50 EMA break. You can have a rule like that as an example, right? If it's above that 2% threshold, all of a sudden you switch to 1 hour short-term management. So you can make rules like that for yourself. So obviously many other ones that you can create as well. These two are kind of like the simplest, right? Goes into a parabolic run, the distance is spreading between the EMAs, switch to short-term management to lock in more profit, right? Or an ACB happened on a 4 hour chart. Now we're in a wave 5 on a 4 hour time frame. Switch to short-term management is another option. Question for the webinar. If the SBO didn't give you the minimum 3%, the 1 hour highs are really high and there's nowhere to stop clip, and the CBO, IBO lined up, would you take it? Yeah, I scale in personally based on my plan. So advanced hybrid personality, right? Advanced swing trading hybrid. You're supposed to take the SBO, scale in with a CBO as an example. Now, the way I execute the CBO, I execute it as a day trade, simple day trade, targeting the 1 hour fib extension, the 1 hour run. You can execute it as a hybrid day trade also, right? We talked about it at the beginning. So you can take that CBO, execute it with the same target as the daily chart, based on a daily chart instead of the 1 hour chart, right? And yeah, 100%. So you missed that CBO, you missed that SBO, I would still take my day trade. So if I miss a SBO entry and a CBO presents itself, I'm taking that CBO as a day trade, right? You might choose to take that CBO as a hybrid day trade. You can do that 100%, just make sure it's consistent. Again, I like to simplify it. Again, I like to take profit. That's why I prefer the day trade, scaling with a day trade personally. I manage them totally differently too. So I manage my scale in more aggressively than I manage my SBO swing trade as well, because I'm approaching him more from a day trading point of view. My scale ins as a day trade, I want to lock in profit, bank, move on, and let my SBO play out. That's how I approach it. Cool. Awesome stuff. And one last question here that I kind of saved for the last, and then I'm going to have a look at the chat, guys. So for those who are in the chat, I'll be with you in a second. and then we'll start to wrap it up. Carl, goals. How do you overcome the disappointment of not reaching the goals you set, which then, for me at least, leads to not being able to visualize and feel achieving those goals? This for me recently has started to feel that goals I used to think and feel were right in front of me are now completely out of reach. And instead of having forward momentum, I have backwards momentum. And I feel that every decision I make takes me farther away from where I want to be instead of moving me closer. You create your own reality, my man. That is your belief system. That is the reality you are creating. That is the simplest answer I can give you, and that's the most powerful answer I can give you as well. That is your current state. That is your current belief system. I have no idea what put you in that belief system, what kind of events triggered that, right? Would that put you into that into that state of thinking, right? Into that belief system. But you create your own reality. So because that is what you believe, that is what you will create, right? Now there's a reason, there's a trigger, there's something, there's a catalyst, there's an event, there's something that happened in your life in the recent times, maybe even previously as well, maybe multiple times throughout your life, that every single time this type of event happens, you get into this other way of thinking, right? And the issue is with the event, it's the trigger. So can you identify the trigger that caused that? Can you fine tune it? Can you release it? Can you release that emotional state, right? You gotta understand that you create your own reality. So what you think about, you manifest, you create, because that is what your actions are based on. The way you create your reality is obviously first, the ideas, the thoughts come in as thought forms, right? That you later execute on. And these types of thoughts are there. That's your blueprint. That is how you work as a human right now in time. That is your personal blueprint. That is your belief system blueprint, right? Just like we have a trading plan. Everybody here has their own beliefs and rules and guidelines, and the way that they look at the world. It's totally different, right? Different experiences that cause that, different ways we grew up with in our childhood, different information that we were fed or learned, you know? We all have our own blueprints. You can change and adjust those blueprints. You can adjust those beliefs simply by knowing that those beliefs are triggered by some kind of catalyst, some kind of event. And if you can identify that event, and every other time it has happened in your life, you can choose to change your perspective of that event and find the lessons and the beauty in it instead, and see the other side, right? You create your own reality. You choose what you focus on. And what you focus on, you then act. So based on your blueprint, based on how you think, how you work as a human being right now, based on the experiences you had in the past, that is how you will act, right? So if you change your blueprint, if you change your thinking, you will act in a different way as well. You will execute in a different way. So it's hard to help you out, my man, without knowing why you're in that situation in the first place, but that's something that you can figure out for yourself by simply looking within what has triggered this emotional response. Can I find any beauty within that emotional response? Chances are you can. Release it and focus on the future again. My man, you create your reality. What you focus on, you manifest, you create. It's as simple as that. And that's it. Once you take control of your life, that's what that creating your reality is, you taking control of your life versus life controlling you. Right now, that type of thinking means life is controlling you, right? Versus you taking action, you taking responsibility and be like, no, that is not how I want to live my life. That is not the emotional state I want to be in, and make a fucking change, right? And focus on what it is you want. Focus on the higher thought, not the lower. And that will make all the fucking difference, literally, right? So I think that's it. Yeah, and Molly just mentions review season 1. Know yourself. Why are you doing this? What are your goals? What are your plans? What do you want to achieve? You know, it always comes back to that. And insights, lessons, season 2 comes back to that too, man. You can do it. Everything that you've done in Blueprint, by the way, guys, you can map out your own systems of beliefs the same type of way, in a way, you know. Find your flaws, I wouldn't even say they're flaws. They're just ways that you were thinking that can be, you can switch your perspective and look at something in a totally different fashion. And as soon as you do that, that's what changes your life. You know, different blueprint, different way of thinking. Awesome, guys. So we're going to start to wrap it up. Let me know if there's anything coming in or any things that you guys want to mention, any feedback, any thoughts, any last minute things. Let me know. I'm just scrolling through the chat here, see what you guys have been talking about. And I hope everybody here who's been live enjoyed the session. For those who are watching the replay, I hope you guys got a lot of value and had your questions answered as well. And I don't really see anything else here in the chat. So looks like we're going to slowly start to wrap it up, guys. Cool. So my last kind of words of wisdom here, you guys now have all the information that you require. You have it all, you have it all. And within Trading MasterClass and now Trading Blueprint, I mean, MasterClass gives you the skills, right? Trading MasterClass gives you the skills, the knowledge, gives you the exposure to all the different things that you can do, right? Trading Blueprint takes all of that, categorizes it for you, right? So you can all of a sudden figure out, well, wow, I can trade 8 different trading personalities. I can even build custom personalities on top of that. And you'll see the options, and all of a sudden Trading Blueprint refines all of that for you and builds a program, a trading plan that is personal, fully custom to you. Everybody here can be executing positions in totally different ways, right? The one thing that's constant between every single personality is higher time frame analysis, right? The way we do our higher time frame analysis, the opportunities that we're focusing on can be the same. We can be all focusing on the same daily wave 3 run as an example, but we can all execute it in totally different ways. One person can execute as a swing trade, another person can execute with an SBO, another person will day trade it multiple times with an ABO, IBO, CBO, ACB, and take their profit every single time. Another person can take it as a hybrid trade, right? That is why, again, it's not about following the way we take trades, the way I take trades, live with you guys or whatever. It's about knowing how you like to execute those positions. The beauty is in the higher time frame analysis. That's where, if you're good at higher time frame analysis, your trading will be better. Your day trades will be better. Your swing trades will be better. It comes down to the setups that you're focusing on. The clearer the higher time frame setup, the better the rejection, the more confluence factors you have. That's what's important too. That's part of analysis. There is a planning phase to all of this, to trading. There's a planning phase where we figure out, where we analyze the higher time frames and find the opportunities. Then there's an execution phase. So the planning phase can be very similar to, doesn't matter which personality you're trading. The planning phase is very similar between all personalities, finding the opportunities. The execution phase can be totally different. We can have 8 different ways of executing, potentially even more, right? That same higher time frame bias, right? And the management, again, there's a few different ways to manage that position, which comes after the execution. Day traders will manage it differently. Some people will have different risk tolerance. Some people will choose to remove risk initially, while others will choose to accept their 1% risk, right? Management differs. However, higher time from analysis, like I said, that's the only thing that's really constant between every single personality here is higher time from analysis. Things to remember, right? When you see other people executing trades, when you see other people talking about their positions, right? It's not necessarily need to be exactly the way you do it. Higher time from analysis can be done. Rob, 2.5 hours and the man could still keep going. Man, I can keep going for days and decades if you want me to. The thing is, next year I'll have more information to give you guys. You know, chances are next month I'll have more information to give you guys. All right, guys, that is it. So I hope you guys have enjoyed this process and built something custom that really works for you. Again, you can evolve it in many different ways. There's a beauty in simplicity. There's a beauty in minimalism. So if you're working off of FOMO, there were a lot of questions and you guys identified it beautifully. And you said, I don't know if this is FOMO, but what about this, right? You can do it all if you want, but yeah, it definitely could be FOMO. The thing is, can you handle all of it? Because chances are, before Blueprint, you were trying to handle all of it and it did not work so well, right? Potentially. So with Blueprint, you can refine that whole process, but there's a beauty in simplicity and adding to that as you develop, as you grow as a trader, right? There's a beauty in that too, in minimalism. You got to remember, I did not start with all of this, right? I started with focusing on the daily reversals. That's it. I just looked at the daily chart and looked for daily reversal candlesticks of good horizontal levels, trend lines, EMA, and took those as swing trades, right? Didn't have management, didn't have nothing. That's how I started. And then moved on to day trading, and it was a daily reversal with a 1 hour trend change. And that's what I started trading with. And eventually it developed into this fully complex, beautifully, perfectly fine-tuned, multiple different trading personalities, right? And the beauty with this for you guys is I started with such simple basics with minimal knowledge, you know. Here you guys have like a whole plan, a whole personality that you can right away build a plan around and execute. And as you grow, as you develop, you can add different strategies. You can change your targets and make them more advanced or hybrid, right? You can add swing trading into it. You can fully grow as you develop as a trader. You don't have to do it all right now. You can add one thing in 3 months, another thing 6 months after that, another thing a year after that, right? You have time. Think about the long game and do what works for you in the present. It's not about overworking. It's not about doing it all right now. Do what you can so that you can achieve your goals, live a good life, have fun, enjoy, right? Trading Blueprint is the whole package. It's enjoying life as you're banking money through your trading plan, right? But you can see the trading plans can get as complex as you want them to. And the more complex they get, the harder it is to execute specifically for beginners, right? So some of you might want to start off day trading CBOs, period, you know, and then add IBOs and then add ABOs and then become an advanced day trader and then later become a day trader hybrid. And then maybe decide, hey, swing trading is better for me. So you'll switch to a swing trading hybrid, right? You can grow like that as a trader and there's absolutely nothing wrong with that. And guess what? You'll be consistent in every single stage. 100%, you know. There's no reason why you can't. And then you just got to figure out how you're going to manage your risk in the initial stages, and then how you're going to manage your profit. Awesome, guys. We're going to wrap it up. Love this session. Thanks so much, Irek. Many great insights. Awesome, Shanda. Love it, love it, love it. Ryan, thanks, Irek. And Molly, awesome. Thank you, my man. Niles, thank you, Rec. Blueprint changed everything. Now let's kill it. Awesome, awesome, awesome. Johnny, you're the man. Thanks, my man. You're the man too. You're the other goat that everybody calls. Rob, 100% value, standing on the shoulders of giants. Thanks, my man. I appreciate that. Awesome, guys. So you have lots to contemplate on. You have lots to work on, and then you can have months and years of execution in building your career as a professional trader. At this point, this is what makes you a professional trader. You're not a rookie anymore. You got your shit figured out. You have your trading plan. You know exactly what you need to be doing. Do that. Focus on it for the long term now, guys, and slowly adjust and evolve as needed, when needed, right? So that is it for now, guys. Peace out. Hope you enjoyed. Thanks for those who are joining live. And if you did not catch this live, hope your questions were answered. I'm sure they were. So take care, guys. Have an awesome day, night, morning, evening, and chat to you all later. Bye-bye, guys.